Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 1st of November. I'm Daniel Lam, your host for the podcast. We, the CIO team, make our sector recommendations every quarter. So while there has been a fair churning of sectors that we're overweight upon, over the last 12 to 18 months, there's one sector that we've been pretty much underweighing across our key regions, and that is real estate. Now, the key reason for this underweight was the rising interest rate and now the higher for longer phenomena. In a nutshell, higher for longer makes financing of property purchases, such as mortgages, more expensive than a couple of years ago. It also makes renting more attractive than property purchases. Now, there's also differentiation amongst the different regions. For example, in the US, REITs make up the majority of the real estate sector, while property developers make up the bulk of the real estate sector weightings in Asia. And, as aforementioned, the rental side of properties has been more defensive than the property development businesses. Now, the property development businesses are suffering from a fall in prices, as well as drying up in volumes. Now, we've discussed the issues that mainland Chinese developers have been facing, which is a cocktail of the aforementioned issues, plus the stress in financing the debt. Closer to home, in Hong Kong, property prices have fallen by more than 15% from the peak. But the affordability price index is still above the property price index. And the expectations of this high for longer phenomena is keeping investors on the sidelines. Thus, there has been close to 41,000 new and second-hand private homes being sold so far this year. Now, this potentially means that this year's overall private home sales could be lower than last year's 47,200 cases, considered the record trough of home sales in Hong Kong. Now, governments can do various administrative measures in order to boost the property markets. For example, the Hong Kong government has halved the buyer's stamp duty to 7.5% from 15% for non-permanent residents and residents buying additional homes. However, the key driving factor is still likely to be the Fed interest rate cycle. And we continue to believe that the Fed may pivot in the second half of next year. Hence, for those that are fans of bricks and mortars, do not despair. We may see some critical turn in sentiment sometime around the second quarter of next year. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.